Good morning. I'm Richard Calhoun, real estate broker with Creekside Realty, 40 years experience here in Silicon Valley, helping buyers and sellers with their real estate needs. Here's my contact information. I will come back to these URLs at the end of the presentation. The most important indicator of what the real estate market is doing is days of unsold inventory. That is how quickly we sell all the homes that are currently on the market at the existing rate of sales. We're looking at the macro data, which is Santa Clara County and San Mateo County, single family homes, as well as condos and townhouses. And we're doing it on a 1 week basis. So we're taking a real short time snap, but a large geographical area to try to get a handle on what the macro real estate market is doing. The gold line is the 5-year median, which is 5 years of data from 2015 to 2019. And then we're comparing that to the current year, which is the blue line. To the left of the purple is 2021, to the right is 2020. So you can see there's the huge discontinuity created by COVID, but right now we're below the gold line. And normally when you're below, that's bad, but with the rate of speed, this says that we're now selling all the homes in both counties, both types of properties in 18 days versus something like 23 days. So we're 5 days quicker, 25% quicker than what we were just a year ago, or not a year ago, but compared to the 5-year median. And just for some reference, everything below 40 days, I consider to be a red hot seller's market. And it has to be above 80 days for me to consider it to be an ice cold buyer's marketplace. Here's the breakdown of the specific numbers. So jumping down to the days of unsold inventory, you can see that single family homes in Santa Clara County based on the last week are only 17 days. Based on the last 5 weeks is 18.6 days. That is the fastest out of the 4 components. The next quickest is single family homes in San Mateo County. Fairly quickly on their feet is Santa Clara County condo townhouse. And in last place is San Mateo County condos and townhouses. You can see how many offers that were accepted in 1 and 5 weeks, as well as the current number of listings that are available. The top line is last week versus this week. So you can see there's been a fair amount of increase in condos and townhouses in Santa Clara County. And, about 10, which isn't a whole lot, of single family homes in San Mateo and 10 in Santa Clara. So that's really not a lot because you had almost 30 increase on Santa Clara County condo townhouses. So the big increase in inventory from last week to this week is mostly in Santa Clara County condos and townhouses. Here is the data graphed out. You have the red line, which is Santa Clara County. It is the biggest geographical area. And you can see we're below 20 days of unsold inventory. I think the number on the previous thing, this would be 1 week data, I believe. So I think that's 18.6 or 17.6 days. This is the Santa Clara County condos and townhouses, and then finally San Mateo County. But again, keep in mind, you have to be up to 40 to get into a neutral or balanced marketplace. So all 3 of them are in a red hot seller's marketplace. This is single family homes broken out geographically, and we're basically saturated red. The 2 exceptions are this area here, which is the expensive homes in San Mateo County, Portola Valley, Menlo Park, and Atherton. And then Redwood City is close, but not completely saturated. It is at 31.3 days. You need to get down to 24 days to be saturated red. Here is where we were just 2 months ago. You can see there's a lot more shading of different colors of red, and the area of white along the San Mateo County, Santa Clara County border is bigger because it includes Palo Alto and Los Altos, I guess. Looking at the active and available inventory without offers. And I say without offers because that's a distinction. Most organizations that report data report offers that are on a contingent basis. I don't do that because in practice, most real estate agents don't show it. Most buyers don't show it. A new buyer can't get that property until the first buyer releases the contract. So I only count things that don't have an underlying contract, that are free for the new buyer to come in and purchase and then know that they're in escrow. But anyway, you can see up until about 4 weeks ago, we had a fair amount of extra inventory. In the last 4 weeks, we've been 100% normal. When you get down into the breakdown, what you'll find is single family homes in Santa Clara County are less than normal, and the other three components have a little bit more than normal. So when you put everything together in a blender and blend it up like the macro data does, you're right at the normal level of inventory. And again, the yellow line is the median of what you'd expect. Now, this is the number of new listings that are coming on the market. And the reason it dived down last year is because of COVID. Sellers weren't putting their home on the market. Well, 300 sellers were putting on their home on the market versus 650 when after COVID was announced. So the yellow line is what you'd expect. The blue line is what we're getting. So we're getting more inventory coming on the market every week than we would normally expect to be having coming on. This is the number of new offers, and that's also higher. And that explains why, with more inventory coming on the marketplace, inventory isn't growing because the demand's there and the demand is eating it up, all the inventory. So in my opinion, based on the data that I have, is this is not a shortage of inventory. This is a surplus in demand compared to recent years. Now what we're doing is we're looking at the three graphs that we just looked at on a percentage basis. So if we were a normal year, you'd be right on the yellow line, and the blue line is available inventory. So available inventory is exactly where you'd expect it to be. The gray line is the number of new listings, is quite a bit higher than you would expect, but so is the number of new offers. And you can see the number of new offers has been outpacing the number of new listings, which is why inventory is not growing, is the demand is outstripping the increased supply. Here is closings, not particularly useful because what happens with offers becomes closing for the most part 30 days later. But again, the takeaway here is you can see the current data is above where you'd expect it. So we're having more transactions than you would normally have in a given year. Now we're looking at the frequency of overbidding. Frequency of overbidding is how common is it for a buyer to not overpay, but overbid on the list price on a particular property. And you can see we're right about 70%. You were up to 75%. It's a little surprising to me how much fluctuation there is in this data. But again, we're looking just at 1 week's data. We're looking at single family homes and condos in both counties. So all of a sudden, if you sell a few extra condos, which are not, the buyers aren't feeling as much pressure, the frequency of overbidding can drop down versus anything changing in the marketplace. Here's the three components. You can see everything's plotted at 0. That's because it's divided by an extra 100. Here it's corrected, but it's not color coded correctly. But it doesn't take long to realize the blue is Santa Clara County, doing exceptionally well up here at almost 80%. About 78% of the sellers are getting more than their asking price, followed by single family homes in San Mateo County, and that's somewhere just around 68%, followed finally by condos in Santa Clara County at about 62%. So in all three cases, you're above 50%. That's strong sellers marketplace, and that's what we're experiencing. Here is the color coding from the current week. You can see there's a few different shades with Morgan Hill, Palo Alto, Los Altos being and the coast being fairly faint, followed by Morgan Hill, and then probably Redwood City, San Mateo, and then most of the Santa Clara County. You can see the percentages. A lot of the areas are saturated red because you get saturated red at, I think, boy, I don't want to guess. I think it's somewhere around 75%, but I'm not going to guess. I don't remember what the number is. I was expecting to see it here on my little chart, and there it is. Saturated rate, 75%. And here is from 2 months ago, the end of January. There is more color variation. There's been a change in the software that I've been using to color code because this deep red is supposed to be the same shade as this sort of rose color. So they're clearly not, but they're both saturated red. So going forward, I just thought it would be interesting not to look at the color comparison, but here you got blue on the coast, you got deep blue in the city, you got a lot of white, you got some saturated red areas, you got a lot of areas that are not saturated compared to here, that even though the colors aren't intense, this is all saturated red, this is all saturated red, shade of pink, shade of pink, shade of pink, and shade of pink down here in South County if I didn't get that already. Now we're flipping over to the magnitude of overbidding. The magnitude is how much above asking price are buyers paying. And you can see that right now back up to about 107%. That's pretty significant. It's not anywhere close to our peak, which is about 112%, It's also, keep in mind, we had the recent insult just a year ago to the marketplace, and typically when the buyers see a correction, and it wasn't even a correction, when they see any type of insult, whether it be 9/11, whether it be COVID, whether it be a recession, they get to be less willing to overbid by as much, and therefore the magnitude of overbidding gets decreased. Here is the color coded map. You can see you got some pink, you got some reds, you got some whites out here at the coast, and you can come over to the table and find out exactly what it is. Yes, some of my data is getting cut off. I was surprised with the change when I was processing that this morning. And here you only have to go back 2 months and you have some of the blue areas here in Menlo Park and Atherton. Now, I like this graph. This is looking at the sale price to list price ratio of every transaction on a given week. So the red line is the current week, and then the go back 1 week is the dark orange right here. Going back 2 weeks is the gray up here. And basically what it does is it shows you at what percentile of the sellers are getting what percent over their asking price. So where you leave the axis here, it basically says somewhere around 70%, 69% of the sellers are getting more than they're asking. And you can come out here to 50%, and 50% of the sellers are getting more than 5% above their asking. You can come down here to 25%, and 25% of the sellers are getting about 112%, and 5% of the sellers are getting 25% more than they're asking. So it gives you a nice distribution. Basically, as the market improves, it goes up sort of in that direction. This is the best month we ever had, which was April of 2018. So we're not performing as well as we did just 3 years ago, but we're basically close to second place. Now, these are only weeks, so we're not seeing the year-to-year comparison, but that's coming up. Now we're looking at just the last 12 weeks. So you can see the dotted lines are the oldest, then the dashed lines, and then the solid lines. So in general, the market slowed down, then it turned around and improved. Most of these are improving in directions. I think this is probably January 16th, and then this is probably it's just too hard to tell, this is the 23rd here. Yeah, it's too hard for me to tell for sure. But the dotted lines are the oldest 4 weeks, the dashed lines are the next oldest 4 weeks, and then the solid are the most recent 4 weeks. So generally speaking, we've improved. And even the fourth week back, March 6th, is in the middle of the dashed line. So in general, the trend has been improving. Now we're looking at single family homes in Santa Clara County only. Since it's the biggest micro marketplace, what is it doing? And now what we're doing is we're comparing March of 2021 to March of 2020. Just to be clear, the historical Marches are March 1st for 35 days, which would take you up through April the 4th. In 2021, we can't get to April 4th yet because we're not there. So it's basically March the 1st to present day, which is midnight last night, the 26th. So this is the 1st through the 26th, where all these other lines are the 1st through April the 4th. But you can see we're having the second best month. With the market improving, I would expect in the next week and a half, this is going to move towards the gold. I don't think we're going to be able to overcome it, but we have between now the 26th and the 4th. So we basically have 10 days worth of data, I think, to get in there, because you have the 27th, 28th, 29th, 30th, 31st, that's 5 days, and then 4 days in April. So 9 more days of data to come up and approach that. And as the market heats up, that is the direction it will go. If the market turns around and slows down, then it will come back in with ease, but we'll see that progress. Now what we're looking at is color coding based on the median price, but also in the table here, you have the extremes. So in South County, you go anywhere from 800,000 to 1.8 million, this being the cheapest 10%. The 1.1 million is the median that most people follow, and then 1.8 is the top 10%. In Santa Clara County, North, Santa Clara, San Jose, Central, South, and East, you go from 750,000 to 1 million for the median, and then 1.6 million for the 90 percentile. So that gives you an idea of the range in the different geographical areas. The blue color coding is based on the median. Blue is below the median for the whole enchilada, and red is going to be slightly above that median. And the median tends to be red with cities. So this up here is pretty much white in color. Mountain View is going to be a slight shade of pink. The more expensive areas are going to be shades of red, and the less expensive areas are going to be shades of blue. And here's where we were 2 months ago. The colors are dramatically different, but they should be the same. And I need to look into why this color coding isn't the same. This is defined by hexadecimal, so it should be the same. Brand new chart. Probably will put it into some sort of map for in the near future. What I did is I went back to the entire calendar year of 2020. So January 1st through December 31st of 2020. What was the median price for each one of the different micro market areas, single family homes only? This is what the median was for the different areas. I compared it to the median price now for the last 5 weeks, and this is the percent appreciation. And when you look at this, basically Santa Clara County is basically 12 to 15% appreciation, which is incredible. The one exception is Cupertino Sunnyvale at 6.5%. And then you go down to San Mateo County, and it's more in line with Cupertino, somewhere around 6%, with Redwood City and Foster City and Redwood Shores being high. Now, the Foster City Redwood Shores is such a small area, I would ignore that. So basically here you're going from 5% to 10%, with Redwood City being the less affordable areas having the highest appreciation. You'll notice the same sort of pattern in Santa Clara County. Your moderate low is the highest at 19.5. But in second place is Los Gatos and Saratoga, which is an expensive area. How do I explain that? Basically, people are moving out of the expensive areas in San Mateo County into the expensive areas of Santa Clara County, causing the appreciation in Saratoga and Los Gatos. Now, again, this is like anytime I do March data, I'm not going through March the 5th, or I'm not getting the data on March the 5th, which is through the March the 4th. I'm only doing year to date, but it gives you some idea of where we stand. The median price and the average days on market is in line with last year. The square footage is a little bit smaller, not a huge much. But now let's start looking at offers accepted. 18 days average, median days 8, so very similar. Days of unsold inventory, 18. You have to go back to 2018 to get a lower number, and it's not that significantly lower. It's 17.8. There's not that much difference. Sales per day, 19. That isn't all that high, and the reason for that is I just copied it over. So the only number I changed was the 13. So that's going to be up dramatically. I should change this to be the 1323 divided by the 26 days that we've had, but that data point is just copied from the previous year. But at 1,300 transactions, offers accepted, you can go, whoa, we got to come all the way back here to 2012 to have more inventory, more offers accepted. But from 2012 backwards, we had. So basically, we've been in a declining volume of market activity for quite a while, but we now have come back. Whether it'll be long-lived or short-lived, who knows? It could be a COVID issue. It's hard to believe it's property tax, but it could be, because now people can move and take their property tax bases with them. Moving down to closings, this is where we get sale price. So we have overbidding, and we are at 108.3%. You have to go back to 2018 to get 112. And I believe there isn't a single other year, scanning quickly, that has a higher overbid. So this is the second highest overbid. Frequency of overbidding is going to be the same, 76.8%, not close to the 83.4% in 18, but there isn't another year that comes close to this year at 76. I'm seeing a 73.5. I'm seeing a 74. I'm seeing a couple 71s. So we're in a good solid second place. And look at the median price, $1,550,000, up from essentially 1.4 a year ago. So you've basically had $140,000 of appreciation based on 1.4 million, which is a 10% appreciation in the last year. And for the last year to have involved COVID, that's pretty insane when you think about it. Number of closings isn't that outrageous at 967. It is a strong year, but there's several years here at 1,000. But remember, again, we still have 9 more days and this number will come up. So what that tends to indicate with this huge volume is the increase in offers accepted has been very recent. And that summarizes the table. So basically, it's a strong month. And that ends the presentation. I'll answer any questions in a second as you get ready. Just want to go back and hit the URLs. The green is the root URL. You put in the year to get to this live meeting on Saturday morning at 9 o'clock. You add in the word handout, the year, month, day code, and you'll get a 28 slide handout. If you do just the root URL, you get to the YouTube channel. And if you put in the year, month, date code, then you get to the specific issue. So with that, I will see if there's anyone with questions. Not seeing anyone with a question, I will say goodbye. Have a nice week. See you next week. Take care, everybody. Bye now.